So we found that the negative effect in economic growth came from some level of debt relative to GDP. We would propose a kind of target limit on debt relative to GDP of maybe 80% of the GDP, something like that, and that would protect from these negative effects. And also we would propose that it be averaged over 5 years. So that you could be just above it temporarily as long as you're just below it at other times, because we have to take into account business cycles, and when the economy goes into a recession, tax revenue falls and you get a bigger budgetary deficit. So this would try to take account of this business cycle fluctuation.
And the reason that you go over a 5-year period, in addition to having the business cycle, is you also pointed out 77% wasn't a cliff. It wasn't a point at which, beyond which the economy goes into a death spiral.
That's right. That's exactly right. And so the idea is once you get above 77%, the rate of economic growth starts to slow by some small amount. If you get further above that, it slows by more. If you get further above, it slows by more. So it doesn't fall apart. It's just it starts, the rate of economic growth starts declining. And the other qualification is this estimate we did was an average over many countries, so it's probably not exactly 77% for every country.
Would it be a good idea to set the limit a little lower? I mean, you set it at 80%, which is a little bit higher than that threshold. Would there be any advantage to setting it lower at 60 or 65%?
Yeah, I mean, I don't oppose that, and I don't have great confidence that it should be exactly 80% for the United States. But in the neighborhood, I have some confidence that that means something. 60% would probably be okay.